Stock investing. Today we're going to talk about 5 AI stocks reported earnings this week. In the middle of the video, you're going to know my mentees stock trades, and also after watching the video until the end, you're going to know my favorite AI stock. Welcome to World Traveling Stock Investor and Option Trader channel. Where are you watching from? Comment down below. So one of my mentees traded stocks and he got 900 profits. The stock he traded was MU. So this is the past week. So congratulations if you got it. Yeah, I also traded MU as well. So this is not a financial advice. This is only educational purpose only. Results are not typical. Past performance doesn't guarantee future results. So we're going to look at US economic calendar. So what's going to happen? So tomorrow we're going to be having some interesting data, CPI data, and this is very important. If CPI comes out to be worse than expected, then stock market could go down. If it's better than expected, hey, stock market could go up. So that's why the stock market did not move so much today. If you have any question, comment down below. This is your chance to ask me any questions during the live. I will try to answer as much as possible. And Thursday, we have some PPI and weekly jobless claims. If jobless claims is more than expected, the stock market could go up because Federal Reserve may not cut the interest rate if there is so many jobless claims. PPI, if it's better than expected, the stock market could go up. If it's worse, stock market could go down. So Friday, retail say, I believe the most important days are Wednesday and Thursday, right? So based on those 2 days, the stock market could go up or go down. But overall trend, what's more important is the earnings. Let's look at S&P 500. S&P 500 year to date is up 13%. It's pretty good. The past 5 years is 73%. Nasdaq, if you look at it, is year to date 13.81%, and S&P 500 Nasdaq the past 5 years is 78.41, so it's more than S&P 500. And remember, we're going to look at 5-year trend while we compare different stocks and also choose which one is the best. The 5-year is very important for my criteria. And Dow Jones at 11.18%, 5-year 51.46. So for the purposes of analysis, I mainly use S&P 500 5 years. I don't really use Nasdaq because Nasdaq is mainly technology. S&P 500 is more diversified than Nasdaq. AI stock number 5, that's going to be reported in this week. SMCI jumped after our 7.56%, so must be pretty good earnings report. So tomorrow I expect AI stock to perform pretty well because of SMCI. SMCI year to date is up only 2.05%. 1 year is down 30% because of scandal, accounting fraud, accusations and stuff like that. 5 year, it's beat S&P 500 easily. Look at this, 770% compared to S&P 500 73%. So would I buy SMCI? SMCI, the first criteria, any stock I buy, they have to beat S&P 500. Yeah, it passes my first criteria. Second criteria, has it been a public company for at least 5 years? Yes. The third criteria, has it been in business for at least 10 years? Yes, in 1993. Number 4, do I like this business? Not so much because of fraud accusation and stuff like that, and their business is quite cyclical and their economic mode is not that wide, so I don't like it. Number 5, financial statement, balance sheet, not so much. So this doesn't pass my criteria. So I'm just gonna not buy. I'm just gonna keep it and watch it. Possibility for trading. Stock number 4, AI stock number 4. Hey, COVID is up 15.72% after hour. So year to date is up 13.87. So tomorrow possibly it's gonna be up around 30%. So let's see. So 1 year it stayed down 35.38%. So 5 year, look at this. Uh, Basically, it just became a public company, so it doesn't pass my criteria, right? It doesn't have a track record of 5 years, so I'm not gonna buy COVID. I may just put it in my watch list. Remember, 5 criteria. What are they? Number 1, it has to be SME 5 over the last 5 years. Number 2, it has to be in business for at least 10 years. And number 3, it has to be public company for at least 5 years. Number 4, I need to like the business. I need to understand and like the business. Number 5, financial statement. If any one of those criteria are not met, I could choose not to buy. So COVID, nope, I'm not gonna buy. It's just gonna be in my watch list. Stock number 3, Cisco. Cisco is year to date up 58.3%. Pretty not bad. And 1 year, 70.41%. Good, pretty good. 5 year, it beat S&P 500. Yes. Look at the maximum. During the dot-com bubble, it used to hit over 67, pretty high. That after that it dropped. So it doesn't. Somebody who bought it at over $67, they are not going to be break even until 2025 August. So 2001 to 2025. So probably about 14 years. But if they DCA, right? They DCA along the way, they will probably be making profit probably in 10 years, 12 years, but that's a long time to wait. Look at this. So that's what bubble is quite scary. Even if the company make money, if the bubble bursts, it could take a long time. So finally, the payoff comes, right? Finally, it double, right? 15 years, double the money. Okay, not bad. Better to put in the money in the bank. But number 1 criteria, it passes, right? It beat S&P 500, so it passed my number 1. Number 2, has it been in business for at least 10 years? Yes. So it has been in business for a long time. Look at this, long time. And has it been public company for at least 5 years? Yes, long time. Number 4, do I like this business? Do I understand? I don't really like so much. I don't really know their business, so I'm gonna pass. Financial statement, I'm not gonna bother look at them, financial statement. So this is just gonna be in my watch list. So let's see how they report earnings. The 2 companies already reported pretty good. So AI stocks gonna be going up, but depending on CPI data and PPI data coming out. So let's see which direction the stock market gonna get pulled. If the earnings are so great, it doesn't matter the CPI, PPI, what happens. It's just temporary. They're gonna keep going up. Stock number 2, this just came on public IPO, and this just became a public company. So I'm just gonna give it a pass. Year to date down 24.53. Let's see. They could possibly see if it jump. If all the AI stocks jump, this reported earnings, AI demand AI wave is pretty big, right? So 2 companies already jumped after earnings. So let's see Cisco and CBRS. Let's see. So I'm just gonna pass this company. It has been a public company for only a few months. So I'm not gonna buy a few months today. But I may keep it in a watch list for trading. Stock number 1, AMAT. AMAT year to up almost double, 95.49%. See, and 1 year, 185. So more than twice, more than double, more than almost triple. 5 year, it easily beat S&P 500. 4 times. Anybody invested at the beginning of 5 years, already 4 times the money. That's pretty good. So does it beat my criteria? Yes, it beat S&P 500 73% versus 305%. It beat my S&P 500. It passes my 1st criteria. 2nd criteria, has it been in business for at least 10 years? Yeah, it has been in business for at least 10 years, since 1967. And has it been public company for at least 5 years? Yes, been a long time. Do I understand and do I like this business? Yes. Do I like their financial statement, balance sheet? Yes, I like them. So this is a company So I may be excited to buy. I used to buy this company as well. So if you want to learn more, if you want to discuss and get my mentorship, the link will be in the description comment down below. Share, subscribe. I will see you in the next video. Bye.